Welcome to the Capital News. I am your host, Alex Kreitis. Today is Tuesday, March 9th, 2021. Thank you so much for joining me. The title of today's podcast, Stock Market Rotation. This is a continuation from yesterday's podcast where we discussed the $1.9 trillion mayhem that is about to be passed through Congress this week. It was supposed to be passed today. It looks like it was most likely going to be passed through the House tomorrow, so we'll continue to monitor that. Nonetheless, yesterday's podcast, I enjoyed it immensely. I hope you did as well. It was sort of take a step back, take a deep breath, and just put what this means, what this $1.9 trillion monstrosity is in context. How big is $1.9 trillion? We throw these numbers around like they're nothing. A decade ago, a few $100 billion was a big number. The Troubled Asset Relief Program at $700 billion was a huge number. It made Republicans and Democrats say, whoa, wait a minute, hang on here. That is a really big number during the GFC. Now, $700 billion is chump change. It's nothing. Nobody Cares Act 2.0 passed in December was $900 billion. And that only got us to right now, through the end of the first quarter, plus the $1.4 trillion that they added to it just for typical spending, just to get us through the first quarter. That's all they're doing. And we said you add it up, you add Nobody Cares Act 1.0, 2.0, we'll call this $1.9 trillion piece of crap 3.0, plus the $1.4 trillion, it gives us a total of $6.4 trillion. That would be the third largest economy on the planet. The United States, China, $6.4 trillion in spending that Congress has authorized in 1 year's time. And that's not everything, because that's not taking into consideration all the other spending that they have already appropriated. According to the U.S. Debt Clock, usdebtclock.org, we're going to spend $8 trillion. Okay, so you got to put that into perspective too, right? We're a $20 trillion economy. You do the math. Okay? That's huge. That's huge. Unsustainable. We bring in about $3.5 trillion in tax revenue, which is too much to begin with, but nonetheless, that's how much we bring in, $3.5 trillion per year. So we're spending $8. So that's more than 2 years' worth of tax revenue that we're spending in 1 year. Completely unsustainable, and we have nothing to show for it. This isn't infrastructure spending. This is not investing in this country. This is not investing in this economy. This is just filling a hole. This is just filling a hole. And we were told the hole's already been filled. We have this miraculous V-shaped recovery. That's what the Trump administration told us. Biden said we're getting back on track. Everything's fine. You had massive bounce back in GDP. Oh, well, great, fantastic. Everybody's better off. It's nonsense. It's nonsense. And the $3.5 trillion in tax revenue that we bring in, that alone would be, what did I say yesterday, the fourth or fifth largest economy right there. And then the $1.9 trillion would be the ninth largest economy in the world. You see how crazy this is when you put it in that context? How much more can we do? And is this really going to be enough to get us through to September? I don't know. I guess we're going to find out. I mean, we still have tens of millions of Americans in food bank lines. We still have tens of millions of Americans unemployed or collecting some form of unemployment insurance. So we have structural unemployment and underemployment. We still have millions waiting in the wings for evictions. How is this all going to be settled out? And once these moratoriums are lifted, well, then these people have to pay all of this back rent, all these back mortgages. So what's that going to do? These questions aren't even really being pondered. Nobody really wants to ask them. As long as the stock market keeps going up, that's all people are paying attention to. But of course, as we stated yesterday, the narrative, because we were seeing and have been seeing some sell-off in the Nasdaq, so the tech-heavy space, technically in a correction. Then, of course, today we saw a nice bounce back over 3%. But yesterday, the story, the narrative, right? It's all about the narrative, was this is a stock market rotation. This is the rotation out of growth into value. So out of these big growth names, very dominant in the tech sector, very dominant in the Nasdaq, said, okay, they're selling out. They're leaving some of these stocks because people are going to start going back out into the real world. Things are going to go back to quote-unquote normal. Restrictions, lockdowns lifted. People are going to go back out. So buy financials, buy energy companies, buy consumer staples, consumer discretionary, buy industrials. Okay, and what did we see? We saw the sell-off yesterday in the Nasdaq, a few percentage points down in the red, and we saw the Dow Industrial Average up in the green, the biggest divergence that we have witnessed since 1993. And of course, today was the exact opposite. So that was an extremely quick rotation. Yesterday, we need to get out of all of these growth names, and today we need to get back into them. It's all story time, folks. That's all this is. These markets are broken. They are manipulated. They are rigged. They are fixed. We know this. This is what happens when you print money and throw it into the system. That's manipulation. When you have policies that drive where it goes, that's picking winners and losers. That's manipulation. That is rigging the system. When we can witness deferred prosecution agreements, we know for a fact there was rigging and manipulation in these markets. Of course, nobody goes to jail. Why would they? This is part of the system. You do it, they're going to lock you up and throw away the key. You counterfeit money and attempt to go out and use it to buy real assets like these people do. They're going to lock you up and throw away the key. This is the system. No end in sight, and it's getting much, much worse, and it's getting extremely reckless. It has been extremely reckless. This is taking it to another level, and we're just getting started because the Democrats are in control. And this is true of any political party. They are going to use their power to pass as much as they possibly can. So this $1.9 trillion is going to come through the pike. We're going to have something else related to infrastructure. We will have something else related to the Green New Deal. We will have something related to healthcare. And it's somewhat in this Green New Deal sector here that is interesting too, because I want to rewind a little bit. I'm going to take you back to where we were maybe a couple months ago, when supposedly the people down in New Zealand got rid of COVID-19. They eradicated it. It was, a complete success, right, for them. And the prime minister was praised. She's fantastic. Isn't she great? Ba, 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 ba. What did she do immediately after COVID-19 was, quote unquote, eradicated from New Zealand? She comes out and she declares a climate emergency. A climate emergency. And I said, we have to pay attention to this one, folks, because my BS bells and whistles and sirens started going off. I said, something's not right here. This is going to be the next narrative. This is the next crisis that we are going to move on to. And I think this is clear as day to see. That's what's going to happen. Once this rollout, this vaccine rollout, is complete, however long they want to drag it out for, whatever the narrative is, whatever they want to plaster all over CNN, whenever that's done, the next thing is, okay, now we have to look back, see how clean the environment got. Did you see how clean the air was? Did you see the animal life that returned to certain areas that they haven't been in months or years because of the pollution, because of the amount of people and the traffic in these various areas? Everything else now is going to be a climate crisis. That's much better to have the clean air and the animals all around these other areas. That's going to be the next story. And all of the justification for it. This is going to be the big push for something like the Green New Deal, but this will be somewhat international, especially in Western countries. The U.S., Europe, they'll be all over this. They're already starting to push it. It's going to be extremely costly. This will cause supply chain disruptions. This will choke energy markets. So that'll be other upward pressure on energy commodity prices. The ironic thing, of course, is to prove somewhat successful in their venture to turn the economy, quote unquote, green, they're going to have to do a lot of mining. A lot of mining for all of these extra base metals, these industrial metals that they are going to have to need, and they're going to have to use to have a successful green economy. You're going to need more silver, you're going to need more copper, you're going to need more aluminum, you're going to need more lithium. Down the list you go. Yet somehow all of this mining activity, according to these same lunatics, say that's the worst thing for the planet. So how do you make heads or tails of all of this stuff? The government, of course, is going to be in charge of it, which means it's going to be a disaster. But we're going to have to pay for it. So that's why I'm saying we are only getting started. This $1.9 trillion is just the tip of the spear for what the Democrats and the Biden administration are going to attempt to push through. And if Chuck Schumer, the leader of the Senate, can pass this stuff through reconciliation in the Senate, well, then look out, because it's not going to take much. If you can get all Democrats on board, well, then Vice President Kamala Harris is going to come down and be the tie-breaking vote. It's all it takes. It's all it takes to continue to spend money that we do not have. And we're not going to get anything for it. That's one of the worst things of all. At least if you were getting something, you could at least say, well, we're getting something. The only thing we're getting out of this is inflation, lost prosperity, lost opportunity, stealing future growth. So really putting it to younger generations. Of course, they don't care about this. So it's all about the narrative. It's the rotation. Of course, they were shying away from that today, because how do you explain that? Yesterday, it's a sell-off of 3% in the Nasdaq. Today, it's a gain of 3% in the Nasdaq. Why? Why did that happen? You have, on a share price front, you got Apple gaining 4%, Tesla gaining 20%, a gain of 110 points, trading at $673 a share. So 20%. This is one of the largest companies by market cap on the planet, up 20% in one day. You know what stocks typically move in that direction in one day? Are penny stocks. Because that's what Tesla is. It is the poster child of this bubble. Most definitely is. This is off of no news, by the way. I mean, you could maybe understand a 20% increase, even in a large cap stock, if there was some monumental news. Oh, we cured cancer. We split the atom. We're traveling at Mach 5. We've created something that is going to eliminate 50% of our costs. Something. Some big news event. We've secured a huge purchase order that locks in certain pricing and for so many years. Huge. Nothing. There was nothing phenomenal out of any of these companies today that saw any type of big jump, especially not like a 20% jump here with Tesla. It's just because it is just the essence of the times. It is a cult stock. That's all there is to it. You can't justify these valuations. You can't do it. People try. Of course, especially if they're proponents of it, if they own Tesla, of course, they're always going to try. People are always trying to sell their book. I understand that. But I would really just appreciate it. Say, look, it's just, people like it. People think this is the next big thing. That's all it is. I mean, we've gone through the podcast before with that market cap where they were at all-time highs. How much larger they were than so many other global car companies combined. Larger than Toyota, Daimler, Chrysler, Volkswagen, GM, Ford combined. Whatever the names were. You get the point that I am making. In order to do that, fundamentally speaking, Tesla would have to sell tens of millions of vehicles. And then you could say, well, hey, they got the market share, so it somewhat makes sense. They don't. They don't have the market share. They didn't even sell 500,000 vehicles last year. The only way that they show a profit is because of the deals that Tesla has with governments in order to sell their vehicles, and they get tax credits because of it. Or however that's worded, however that's organized. You understand what I'm saying? That's all it is. It's a con. It's a bubble. It's a joke, just like the rest of these markets. And this will continue until it doesn't. And when you have this $1.9 trillion coming down, you're going to have $1,400 stimulus checks. A lot of people have already been surveyed as to where that money is going. A significant portion of it is going into stocks because stocks only go up. Now, the markets are supposed to be forward-looking, obviously. So a lot of this, technically speaking, should be priced in because they have been talking about this bill and the $1,400 checks for quite a while. And I don't think it's a big surprise to see that this thing would pass. So if the markets are forward-looking, a lot of this is supposed to be priced in. Now, of course, time will tell as to whether or not that's the case. Once this actually gets passed, once the checks are in people's hands, will the markets continue to go up? Of course, if the Federal Reserve continues to expand its balance sheet and money supply, then the answer could be yes, it does, because that's the correlation. That is the relationship that we have been witnessing here for quite a while. You can see that for yourself, Capital Economics presentations, capitalnews.com, and our YouTube channel, Monetary Measures. 2 videos, part 1 and part 2. Check them out. You will understand what's going on here. You will understand these relationships, these correlations. But that is the ultimate question at the end of the day. And I reiterate this all the time because that's how crucial this is, because that is, to me, the biggest question that remains with respect to central banks, federal governments, and the markets. How much more can federal authorities and central bankers do before the markets say enough is enough? What is the limit? What is the constraint? Is it these rising yields in these bond markets globally that are starting to signal, hey, enough is enough? This is becoming concerning. I mean, a little too late to the party, by the way. I mean, this has been concerning for a long time, but now, finally. But there's so much manipulation. But even with that, that's my point. Even with all that manipulation, they are still not more powerful than the markets. So are the markets calling BS? Yesterday, Chinese stocks were selling off. Chinese authorities were starting to get involved in the markets because that's what they do. They do it openly. This is all in the open, folks. The Swiss National Bank, they buy equities. The Bank of Japan, they buy Japanese ETFs. Chinese authorities get in and buy stocks in their markets. But the point is, with the Chinese getting involved, it really didn't work. So is that really the narrative of the market? Is that really the stock market rotation? This rotation out of central bank planning authority and federal government coordination? Is that the real rotation that is underway here? Because if that's what it is, then this is game, set, match. This is sort of the end of the story. There's really nowhere safe to be. The question is, where do you want to be on the other side of it? And I think that's precious metals and commodities. Because that's real. Because they have proven the test of time and because they are needed. They are needed. It's not so much a question of wants, but a question of needs. And those things are going to be needed. So that's why I always come back to the precious metals and the commodities. Because that's what's needed. Gold and silver have proven the test of time. And at least for silver, there's industrial and commercial use for it. Especially if we're going to go quote-unquote green. It's going to be needed in larger quantities. And there are supply issues with it. So there's a lot of momentum, fundamental momentum behind silver especially. But we know it's manipulated because we have the deferred prosecution agreements that keep coming down the pike. So it's just the crazy world we live in, busted markets, flawed economics, flawed political theory. It's just a circus. And people are acting reckless, and it's to be understood. Because if you're getting a check for $1,400 for doing absolutely nothing, you figure, well, what the hell? I'll place it on black or I'll place it on red and we'll spin the roulette wheel and see what happens. Wasn't my money. Of course it is. It's their future selves' money. I mean, that's inflation. That's where it's coming from. But people can't connect the dots and they figure, well, there's no risk. It didn't cost me anything, right? That's the thing. Well, won't go to the casino and place it on red or black. I'll put it in a stock. I'll put it in GameStop, AMC. Let me find the next company that's going bankrupt. Let's bid that price up. That's the world in which we live. It's absolutely crazy. The hits just keep on coming. And the next narrative, too, in conjunction with the Green New Deal and the climate crisis and all this other stuff, now we have potential high-level talks between U.S. and China, which may take place over in Alaska. I guess meet in the middle, so to speak. So that's going to be another narrative that drove me crazy under the Trump administration. But it looks like they're going to recycle this BS because it might be one of the last things that these guys can do, because the Chinese are attempting to manipulate their markets, and we're continuing to do the same here. So they knew, we did, the U.S. did, the Trump administration knew, as did the Chinese, that, if we could say, if somebody could put out a presser or a memo or a tweet saying that talks are going well, or that there's just going to be talks, well, markets should go up. So we'll see if the market continues to buy this narrative. That is all they have left. That's the purpose of today's podcast, is to put as much stress and emphasis that all they have left is the narrative. Can they continue to print money? Can they continue to expand their balance sheets? Can they continue to buy treasuries here in the U.S., euro bonds over in the ECB? Yes, of course they can. But will it continue to have the effect that they are looking for? And the effect that they are looking for is higher financial asset prices, which of course prices out a lot of people from the market. People can't afford homes. It creates the incentive for home builders to end up building more high-end real estate, whether that's apartments, whether that's single residential homes, because that's where the margins are. And right now, those are the people who are doing the buying. So again, this is the tale of two economies, because you have a lot of people in the middle class or lower income levels that simply are being priced out, and home builders are not adding to the supply. So what is there, just by basic economics, is going to be at a higher price. This is a direct result of quantitative easing and lower interest rates. This is the trade-off. There is no free lunch. If you want to have low interest rates for this long, you are going to see asset prices increase. You are going to see stocks, bonds, real estate increase. There will be a limit, and when it breaks, it will be devastating. This is going to be a combination of the GFC with the dot-com bust. This is going to be known as the Greatest Depression. And when you look at what's taking place globally, with the protests and the riots and the revolutions and the civil wars and everything else, it's just getting started. And those are going to have spillover effects. Those will have contributing negative impacts to supply chains. So there will be further supply chain disruptions, which we are still making our way through. Our ports in this country on our coasts are still backlogged. It's ridiculous. So that's continuing to put upward price pressure on commodities and other goods and services. And when we talk about goods and services with respect to net exports, we have one of the largest deficits in our history at $804 billion, only surpassed by $1 billion, $805 billion. Of course, this is a deficit, so this is negative, prior to the great financial crisis. And this is something I might have to do a presentation to show you guys this too, but of course you can find this easily, just net exports of goods and services, Federal Reserve economic data. But you'll see where you started this big decline, because the United States used to run surpluses or small deficits. The data I'm looking at goes back to 1947. You really don't start to have steady deficits until the Reagan administration. Then you sort of get back up, sort of breaking even under Bush 1 in the early 1990s. And then, of course, Clinton comes in, signs NAFTA, 1994, 1995, and boom, it's off to the races to the bottom. Which, ironically, coincidentally, but of course, there are no coincidences, that's when the Bureau of Labor Statistics also changed how they calculated unemployment. You see, folks, they know what they're doing. They knew that this was going to cause massive unemployment, signing of NAFTA. They knew the deficits were going to explode, blah, 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 blah. They know. There's no coincidences in this stuff. These people understand what they're doing. They just do not care about you, which I'm trying to get through to you, whether you're Republican or Democrat. They don't care about you. I don't know why you look at them as if they do. Don't vote for them. Don't give them your respect. They don't deserve it. Period. End of story. Leave them immediately. I have all the evidence. What else do we have? We have the Reserve Bank of Australia coming out and announcing that they are not going to raise rates until at least 2024. So we got another 3 years of all-time lows in Australia. And Australia is a diversified economy. I mean, it's still heavily commodities based, and that's perfectly fine. I mean, especially if I prove correct that we are in a super cycle to the upside for commodities. The fact of their geographical location being close to China, India, and the rest of Asia for that matter, should bode extremely well for them. But for some reason, I wonder why that is, the people, the central bankers within the Reserve Bank of Australia are saying, no. We need to have low interest rates, record low interest rates, for at least the next few years. It's ridiculous. It's completely ridiculous. If there's anywhere where you might actually see some organic growth or something where you could do well, it might be in Australia because of the commodities. If there's actual growth in Asia. But the problem is, of course, it's all smoke and mirrors. China's putting on one of the biggest smoke and mirror shows in human history. Can they get things done faster over there than they can in some countries like the United States? Sure. It's not as political. Things can be more streamlined. But I don't know if you want to go in China and, try to have freedom of speech, freedom of press, and then you go missing for a while as they send you to some sort of re-education camp. I don't know if that's what you want to do. I don't know if that's what you want to give up. Maybe it is. You can get a plane ticket when you can leave the country and you can go. Pros and cons to every system. But that most definitely is a bubble economy. And we talked about that last week when the Chinese regulator came out and said there are bubbles in the U.S. and Europe, and even in China, with respect to their real estate market. People are buying homes, they're buying real estate, but they have no intention whatsoever of living in them, of living in these homes or apartments or condos. They're just speculating, hoping that the price goes up. They know. That was the first shot across the bow. Once these things come down, the Chinese can say, well, look, we told you that there was a bubble in the U.S. and Europe, and we told you if they popped and they burst, there would be spillover effects, so it's not our fault, people of China. We told you that this could happen, but it's not our fault. It's those damn Americans and Europeans. Blame them. It's the blame game. Again, more narrative. That's all it is. It's all smoke and mirrors. This is quite easy to understand. But you have a multi-billion-dollar media industry whose job it is to entertain you with the circus, with a whole bunch of hocus pocus, a whole bunch of nonsense, to keep you distracted and divided. It's the divide and conquer every single day. That's what I'm up against. That's 24/7. I'm here 30 minutes a day. Help me out, people. I need it. But then we'll end this podcast here today just with some market performance. What's going on overnight? We have the dollar index at 92.16, down from where we were during yesterday's podcast, but up overnight about 0.2%. Major currency pairs gained earlier in the session against the dollar, but all are pretty much down overnight. Nothing too drastic. One of the bigger decliners right now is the Aussie and the New Zealand dollar, giving back about 0.4% against the U.S. dollar. Overnight futures trading, we have the Dow Jones flat. The S&P 500 is down 0.2%, and the Nasdaq 100 is giving back 0.33%. Cash trade in Japan is flat. Pretty much a sea of green across the pond in Europe. And the Australian cash trade gave back 0.8%, and Chinese stocks are currently flat at the moment. WTI is at $63.51. Brent at $66.92. A lot of this weakness is off of larger inventory builds. This is not demand-driven, folks. I'm telling you. This is not demand-driven. This is inflationary-driven and supply chain disruption and whatever else they want to put through regulation-wise with respect to the coming climate emergency crisis that they will most likely be declaring in one form or another. Okay? So that's what it is. Gold and silver. Gold is at $1,716 an ounce. Silver at $25.78. Both did decent today, silver especially, but giving back right now. And copper remains right at that $4 per pound level. And then to round it out, Uncle Sam's 10-year junk note is yielding 1.54%. So not too much movement, which basically indicates to me that the Federal Reserve behind the scenes, of course, is starting to implement some sort of Operation Twist or yield curve control, which, of course, yield curve control is what they're already doing. It's just more now pronounced. It's just more transparent. It's now in the open as to what they want to do, and they'll simply target certain notes, yields, bonds, what have you, and they'll say this is where we want it to be, and then they hope that it stays there. Now, of course, they will do their damnedest to keep it there through trading, and then Operation Twist is just simply selling shorter-term notes and buying on the longer end of the Treasury curve. That's all that is. So you'll have higher rates at the lower end of the curve and higher rates at the low end of the curve, at the short end of the curve, I should say, and lower rates at the longer end of the curve. So your 10-year yields will go down, 30-year yields will go down. At least that's what they might attempt to do. That's what they're going to want. Okay? So it's one thing to pay attention to what they say. It's another thing to pay attention to what they do. And of course, when we come out on Thursday with initial jobless claims, and hopefully the Federal Reserve has more data updated. Last week, they were lackadaisical of printing updated figures with respect to M1 and M2. Gee, I wonder why. So hopefully they have those numbers updated so we can actually see what they're doing. But there you have it, stock market rotation. We know what to pay attention to. We know the real narrative to pay attention to. And if you don't, then listen to it again. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Commodities. Godspeed.